We can't hear Brian. I know we're live, and this is the best part about doing live YouTube. We start.
It was just working
There you
fine.
go.
Of course, as soon as I
Nice
hit
job.
record, there we go.
That's
Hello,
okay. That's why people come here.
Hello, everyone. Welcome to another series of stocks from scratch. This is when Brian and I take a stock that we don't know and we research it live from scratch. Brian, what stock are we talking about today?
Alibaba, which is definitely the biggest, most well-known stock from scratch we could possibly do, and I have spent zero time ever looking at this stock. Ever.
I can tell you what I know about it. Like you, I've never done any research. I can tell you that it's based in China. It's founded by Jack Ma, who's one of the richest people in China / on Earth. I can tell you that it's a marketplace, so it's an eBay model. It's not a Amazon model, right?
Okay.
And I'm pretty sure they have Alibaba Cloud. So I'm pretty sure there's a cloud computing
So they're following that playbook that we see with Amazon.
It's similar to that, but a lot of questions I have about the company I don't know the answers to. So we're going to show you how we would go about researching this company live from scratch. This video is sponsored by StockCard.io. At the end, we will put this in our thumbs up or thumbs down portfolio to hold ourselves accountable.
Hey, before we get started, do you have a guess? Will it be thumbs up or thumbs down?
I'm gonna guess it's gonna be in the investable range. I'm guessing it's gonna be at the lower end of the investable range, but I don't know.
You know, that's where I think it's going to be for me too. I know Alexander's already saying, and I agree, it's going to get killed in your gauntlet.
Oh yeah, we'll see. So I'm definitely gonna have to take points off for currency movements and for geopolitical risk and things that we don't know up front. If you have any questions about, is this going to be delisted? We don't know. There's no way for us to handicap that. If it does get delisted in the U.S., it would likely be relisted somewhere else. So you might face a liquidity problem for a short period of time. But anyway, let's
find out.
Let's check it out. Anti-tourism says Charlie Munger just upped his position in Alibaba.
I didn't know he was an investor in the first place.
Me either.
We're not kidding when we say we don't know much.
Yeah. Okay, let's do this. Okay, so we're going to start with our investing checklists, Brian.
All right.
And the ticker symbol here is BABA. Love the ticker, BABA. This is a $133 stock. Market cap of $1/3 of a trillion. Is revenue recurring? I'm going to say yes. Is
Probably.
it profitable? I'm pretty sure.
Probably.
I'm pretty sure it's profitable and free cash flow positive. And I know it's not done well recently, so it's down 50% from its high. I don't know if it's a market beater since coming public.
I imagine it is.
I'm gonna guess no. I think
Really?
this company came public about $100. But
okay.
Anyway, let's see. So
I'm curious.
We're at StockCard.io, the sponsor of this video, and we're gonna start with it. So popular stock, lots of people following it. So all time plus 50%.
Yeah. I see. Okay.
Is that a market beater?
No, I think it's losing.
Yeah, since 2014. Yeah, probably not. Yeah, the market's up. Yeah, so it's losing to the market. Okay. Alibaba is the world's largest online and mobile commerce company, as measured by gross merchandise volume.
There we go.
7.5 trillion CNY for the fiscal year ending March 2021. It operates China's online marketplace, including Taobao, which is consumer to consumer, Tmall, which is business to consumer.
Now, before we go any further, Taobao, consumer to consumer, that's like eBay.
Yep.
That's where you buy something from me because I just have it lying around my house.
Sure.
Okay.
Or you have a marketplace, or you have a home store. Yeah, that kind of thing.
Yeah.
Tmall is business to consumer, so that's third party Amazon merchants.
Yep.
Okay. And Alibaba's China's commerce retail division accounted for 63% of revenue. Additional sources include Chinese commerce wholesale, 2%, international wholesale retail / marketplace, 7%. So what's that? About 7% of sales are outside of China. Okay. Cloud computing, 10%. Digital media and entertainment platforms, 4%. Logistics services, 5%. So
that's
AWS. And innovation initiatives.
You mean FBA, fulfillment by Amazon?
Yes, there you go. Innovation initiatives, other. Okay. Well, I have a feeling they're going to get good scores on optionality.
Yeah, as well they should.
They're listed in the NYSE. Total debt, 22 billion. Free cash flow, 30 billion.
And the question will be, is that in dollars or not? I mean, I'm guessing it is.
Yeah, currency stuff. Assuming that this is accurate, that means shares are trading at 11 times free cash flow.
Which is not bad.
And less than 3 times sales, 18 times earnings. Assuming that these numbers are accurate. We'll check out the company's website a little bit. All right. Is it growing? Yeah, I'm pretty sure this company is growing like crazy fast. I'm sure it has been growing at very, very fast for a long time. Sales growth, 44%. Revenue growth in the most recent quarter, 38%. 3-year CAGR, 41%.
So it's sped up.
Yep. Very fast. It's profitable. It's EPS profitable. It's
positive.
Gross margin is 35%, which is 10% higher than the industry benchmark. So
I believe that. That's pretty good gross margin.
A good margin, which makes sense if its model is primarily eBay and not.
Right. Exactly.
That's a higher margin business if you're just a marketplace. In theory, they should have a good balance sheet. Tons of free cash flow.
Wow, so
Their free cash flow has grown 24%. Returns on capital, 10% for invested capital. Return on assets, 8%. Return on equity, 13%. Okay. And the stock has not done well. The stock has not done well. I have a feeling that's more a reflection of investor sentiment about Chinese stocks and high growth stocks than it is about business performance. But okay. Company overview. Okay. Alibaba Group's mission is to make it easy to do business anywhere.
Not bad.
I like it.
I don't know how much of that is true looking at that map and knowing that what do we say, like 9% is international? 99% stays, or 91% stays in that area.
They know what a mission statement is, and this is simple, optionable, inspirational.
Yep.
Can you read that okay?
Yep.
We enable businesses to transform the way they market, sell, and operate, and improve their efficiencies. We provide the technology infrastructure and marketing reach to help merchants, brands, retailers, and other businesses to leverage the power of new technology to engage with their users and customers and operate in a more efficient way. Well, that's a run-on sentence, but I get what you're saying. Okay. Our business are comprised of China commerce, international commerce, local consumer services, Qianyao.
That's the FBA.
Yep. Cloud, digital media entertainment, and innovative initiatives, and others. In addition, Ant Group.
I remember something happened with Ant Group.
They wanted to spin them off or take them public, and that's when Jack Ma got into like a feud with the government or something like that, and they put a stop to that. But I know that that's I'm pretty sure it's a financial services company that's huge.
Right.
An unconsolidated related party provides digital payment services and offers digital financial services to consumers and merchants and other businesses on our platforms. So that's PayPal.
Right. But does that, do you get Ant Financial if you buy Alibaba?
An unconsolidated related party. Maybe. An ecosystem has developed around our platforms and businesses that consist of consumers, merchants, brand, retailers, third-party providers, strategic alliance partners, and other businesses. Yeah, this is a strategically important company, right? GMV transacted in the Alibaba ecosystem was 8 billion renminbi. I'm pretty sure that's how you pronounce it. Renminbi. Oh, excuse me. 8 trillion renminbi.
And I think it's like 15 to 1 ish, or maybe I'm not sure.
Many billions.
Not 15. 6 to 1 maybe.
Usually they translate renminbi to dollars in their filings.
Yeah.
Which mainly includes gross merchandise volume transacted through our China retail marketplace, as well as gross merchandise volume transacted through our international retail marketplaces and local customer services. Annual active consumers on the Alibaba ecosystem across the world reach 1.24 billion.
That is a lot of
as of the most recent quarter. 1.24 billion. 953 million in China and almost 300 million outside of China.
So basically China plus the United States-ish.
Yeah. Right. Okay. We do not pursue size or power. We aspire to be a good company that will last for 102 years.
It explains why.
specific.
I know I did my annoying thing. I know why they said 102.
We aim to build the future infrastructure of commerce, and we envision that our customers will meet, work, and live at Alibaba. Okay? Lasting 102 years means we will have spanned 3 centuries.
There you go.
An
That's
achievement
why.
that few companies can claim. Our culture, business model, and systems are built to last so that we can achieve sustainability in the long run. Alibaba's ultimate goal is to create value for society and help find solutions for society's challenges. We want to convert Alibaba's resources into fuel for small and medium businesses, which in turn will support the advancement of the whole society. Okay.
I mean, as I read this, I'm like very aware that there are certain things that they must say to stay in the good graces too.
Yeah,
I
that's
like
fair.
it. Don't get me wrong. I love all of that.
How much of this is lip service versus real? I don't know, but
Mhm.
they're saying the right things, right?
Yeah, exactly. That's my point.
We enable commercial and social interactions amongst hundreds of millions of users, between consumers and merchants, and among businesses every day. We empower our customers with the fundamental infrastructure for commerce and new technology so they can build businesses and create value that can be shared among our ecosystem partners. We strive to expand our products and services to become central to the everyday lives of our consumers. We continue to expand our businesses from commerce to local consumer services. Yep. We have set medium-term goals for fiscal year 2024. Continue to expand our globalization efforts, serve more than 1 billion customers through our China consumer business, and facilitate more than 10 trillion of annual consumption on our platforms. We believe
Not a whole lot of growth in terms of
Yeah, what's
Chinese
that?
consumers. They're at 953 now.
Okay, I mean, there's 1.4 billion, something
Yeah.
like that. So that's essentially everybody.
They should reach that goal.
We believe the goals for fiscal year 2024 put us closer to achieving our vision for 2036, serving 2 billion global customers. Aren't they at 1 point something billion today?
They're at
1.3?
1.3.
Enable 10 million businesses to be profitable and create 100 million jobs. Okay. Alibaba Group was founded in 1999 by 18 people led by Jack Ma, a former English teacher
Oh, there's a picture of him teaching
from
English.
Hangzhou, China. I think that's the founding group.
Oh, okay.
Maybe not. Our founders started our company to champion small businesses in the belief that the internet would level the playing field by enabling small enterprises to leverage innovation and technology to grow and compete more effectively in domestic and global economies. We believe that concentrating on consumers' needs and solving their problems, whether those customers are consumers, merchants, or enterprises, ultimately will lead to the best outcome for our business. Great. Our businesses. Okay, we operate various businesses and also derive support for ecosystems from the businesses and service and related of and affiliate companies. Our major businesses include Taobao, launched in 2003, provides consumers from both large cities and less developed areas with an engaging, personalized shopping experience optimized by big data analytics and technology. Throughout highly relevant content, Brian, your video went out. They can learn. They can also interact with each other and their favorite merchants. They can also...
Fresh Hippo.
Yeah, you're reading ahead again. Okay.
Yeah.
Taobao Marketplace. So that's there. Yep, we heard about that. Launched in 2016. Fresh Hippo or free
Hippo. That's the hippo right there.
Fresh Hippo is a self-operated retail chain that integrates online and offline retail capabilities used in storefronts as warehouses to fulfill online orders. By managing inventory and offline resources effectively, it satisfies consumer demands in store as well as their neighborhood communities. So this is like the Amazon 4-star or the Dropboxes. 257 self-operated Fresh Hippo stores.
All right.
Okay. Lazada, 9 years old.
Oh, we know Lazada. This is Shopee's main competition.
And who's Shopee?
Shopee is the e-commerce platform for Sea Limited in Southeast Asia.
There you go. Lazada is a leading fast-growing in Southeast Asia that connects. Yeah, Lazada provides consumers with access to a broad range of offerings. 100 million consumers. 82% of Lazada's parcels went through its own facilities or first-mile fleet during the same period. Okay, 1688. $19.99, leading integrated domestic wholesale marketplace by revenue. Provides sourcing and online transaction services by connecting manufacturers and wholesalers who buy to wholesale buyers in China who typically trade in apparel, accessories, and etc. Okay. Le.me, which means Are You Hungry, is a leading local service and on-demand delivery platform in China.
Good Lord.
Okay. It's a last mile delivery network. Acquired in 2018. Okay. Ding Talk. Collaboration workplace, working, sharing, and collaborating for modern enterprises and organizations.
So it's like Zoom?
Yeah, that's what I read. Youku, a leading online long form platform in China. So YouTube.
Yeah.
Okay. Acquired a controlling stake in 2016. So that's an acquired business.
Was
Okay.
that publicly traded? Maybe not.
I don't know.
Might be thinking of something else.
Marketing demands of merchants, brands, and retailers across the platform. Monetization platform. Alimama.
Interesting.
It matches own platform, enables Alibaba to monetize its commerce, digital media, entertainment, and other businesses. Has an affiliate marketing program.
This is the FBA.
Yeah, this is the okay.
All right.
Okay, there we go.
Oh, and the cloud.
And the cloud.
That's probably a very important part of it.
2009 is a digital and intelligence backbone of Alibaba and offers the complete suite of cloud services anywhere. 1 second.
Mm-hmm.
There we go. Okay. Do you see Investor Day? There we go.
That's helpful. Oh boy, is it going to be in English?
Presentation materials. Are these presentations?
Yep, looks
China
like it.
retail marketplace, Taobao,
It's a whole thing.
cloud, group strategy, financial and investment perspectives.
We could probably spend a month on this.
Yeah, this is a complex business. Let's try this. Financial review. Okay. Alibaba annual active customers. So this is year over year. International grew very quickly.
Yeah, it did.
And yet they added still more people in China than international. Okay, so international, they have AliExpress, Lazada, Daraz, and Trendyol. Okay.
Uh-huh.
AAC, what does that mean?
Annual active customers.
Yeah. Oh, that annual active customers. There it goes. Okay. So renminbi up 39%, excluding Sun Art plus 25%. That must have been an acquisition.
Must be.
China commerce is 650 billion. So
well, but that excluding part's important because I think what they're saying is that organically, quote unquote, the real growth was 25%. And the China commerce real growth was more 24%.
Yeah, so this is the organic growth rate.
Yeah.
And this is Sun Art. I didn't see Sun Art listed on their other things, though.
I didn't either.
Cloud computing is, geez, they put those numbers so close together. 69 billion. So of the total, so cloud computing is 7%.
Mm-hmm.
Up 37%. Okay. Adjusted EBITDA of 153. So that's an adjusted EBITDA margin of 20%.
That's
not a
good.
metric I like, but still strong. And non-GAAP free cash flow of 138.
But that means their free cash flow yield is
very high. Very high. Why we are investing. New retail serve consumers, Taobao, logistics, cloud computing, digital media, innovations, others, adjusted EBITDA. So
I really appreciate that slide. I wish most companies would do that.
It would be nice, wouldn't it?
Yeah.
Okay. Providing more transparency. Commerce, cloud, digital media, initiatives. Don't know what those are. Okay. More new segmentation. Okay, so they're breaking.
Does that mean they're gonna break out every single one of those, or maybe each column gets each column gets
each
broken
column
out.
Gets it. Okay, so commerce up 33% with
the vast majority.
Yeah, this is the profit center, right? And look how profitable that business is. That's a
It's a
adjusted margin in the
30%.
somewhere around there.
So they're losing money on international commerce. They're losing money on local consumer services.
On an adjusted EBITDA basis.
Right.
So yes. So this is the cash cow that's funding all this, which makes sense.
Yes, it does. However, at the same time, they are making money on their cloud, which again is not super surprising. Like that's the main driver at Amazon.
Our own business. Okay. Investing in our own business. Maintain leadership, increase penetration, expand, enhance, future potential, target retail sales, population of 600 million, active annual customers of 270, and plus 400% order growth.
So this is the future potential. Okay. They're saying that they have
okay.
That's what they could do. That's not what they did do.
Got you. Okay, thank you. Addressable market, 35 trillion. Yeah, okay, so we have trillions of up for sales. The cloud's going to grow. Everything's going to grow. Okay. I like this. This is showing the S-curve and where their various segments are. So they're saying Lazada is actually pretty mature.
That's interesting.
Priority, user base, spending focus, mind share, market share, efficiency. Cool. This is a good framework here for thinking.
What does it say after exploration, fine-tuning, value add? Interesting. Okay.
Fine-tuning, value addition. Taobao, yep. Okay. Maintain leadership, continue to add new people. Taobao deals. This is how they're going to get at different segments of the market. Live streaming.
You know, it is interesting. One of the things that our friend Morgan Housel talks about a lot are the demographic changes in China and how there aren't nearly as many young people there, and there's going to be a lot of old people, and the population is actually expected to go down rather soon. So it's interesting when you think about how that might affect Alibaba.
Well, if they're expanding internationally, in theory, that should be able to get over that hump. Okay.
In theory.
High frequency services. Ella.me, which is the Are You Hungry thing?
Yes.
So that's growing to the destination. I don't know what this is. They didn't call that out. That's growing. Yeah, it's essentially saying there are different stages of maturity. Taobao is funding all these other things, and we are going to increase penetration rates.
This is their infrastructure is wow. So it looks to me like
this is a long presentation.
Well, if you go up one, it looks to me like with their fulfillment that a bunch of them are international, that's interesting to me because then that tells me that's like their outlet that's the inlet for international businesses maybe to get into China.
Yeah, providing that infrastructure.
Or maybe they're saying that's what they want to do, not where they are.
Growing very quick. Percentage revenue from non-internet industries. 49%.
Yeah, this is where they want it. Okay, never mind.
Value
this is where
for
they want
existing
to
businesses. SunArt, Retail Group Limited. Business digitalization. So this is just going to be, I mean, we kind of knew this going in. It's going to be a complex, make it easy to do business anywhere. They end it with their mission statement.
You get points for that.
Okay. Let's go up to investor relations, financial reports. Now, with a company like this, what we're looking for is typically the F1, I'm pretty sure. Yeah, so here's the annual report. I have a mid-year one too, but we'll go to the that. If you're looking at SEC filings, it's the F1, I'm pretty sure it's called.
Sometimes I see 20F, sometimes I see 40F.
Oh, yeah, you're right, 20F. 20F. Okay. Our mission, to make it easy to do business anywhere.
And they got 102 years right there.
Yep.
And
globalization.
Same stuff.
They're consistent. Not everybody is.
Hey, this is one of those instances where being lazy and cutting and pasting is a really good thing.
Baseline, If not, who? Me. Live, work. Seriously. Chance is changing the concept. Trust and customer first, employees second, shareholders third. Very Johnson and Johnson like. Great. Vibrant culture and people. Alliversary. Alley Day. May 10th is Alley Day. Oh, that's the employee appreciation. I know that like they have Singles Day in China, which is the biggest shopping day of the year globally.
Globally, I didn't know that.
Yeah, it's bigger than Black Friday.
Their ecosystem GMV is 1.2 trillion.
US dollars, trillion with a T.
Yeah, that's
Our
crazy.
data centers, immersion cooling can save up 70% of the energy needed, 300,000 tons of carbon emissions reduced. So they're going for the green aspect. Great. 2.5 million merchants in funding domestic and overseas charitable projects. A letter from our chairman and CEO.
So it's not Jack Ma anymore.
Yeah,
that's
is
not
that
him.
That's not Jack Ma?
No, I think something happened. See, and we're showing our own ignorance. So I think something happened when Ant Financial was going on. I think from what I remember, he challenged the government in some way, and he's no longer the CEO. I think he'd still be involved, but he's not the CEO.
Well, we'll see that. We'll see that.
Yeah.
Okay. Yep. So I want to express my appreciation. Unprecedented times. We are well positioned. We remain focused on our vision and mission. Global annual customers reach 1.13 billion, surpassing 1 billion milestone. 240 million overseas. Lazada's swift growth in Southeast Asia, rapid expansion of AliExpress in Europe. They're in Europe, and healthy development in our investee company Trendall in Turkey. Contributed GMV then 1.2 trillion. We have China's most diverse customer base with the highest consumption power. It's huge. Our new retail strategy and been actively experimenting with different retail formats. We have redefined the shopping experience for consumers offline and online by leveraging our understanding of the industry's complexities to transform traditional retailers such as RT Mart and incubate our new omni-channel retail formats such as Freshippo. We are adjusting a wide range of consumers' needs to a full range of high-frequency fulfillment services that include 1-hour delivery, half-day delivery, and next-day delivery.
That's impressive.
Yes, half-day delivery in China.
Where does that land for your moat? Because I know where that lands for me. No, I know, but like what moat would that be to you?
I would think more about that, I guess.
I think for me, it'd be low cost production. Because if they built out the infrastructure to do that, I mean, how would you match that?
JD.com has.
Right. JD is the wild card. Because JD did a really great job of that too.
Right. It's a moat. I think that's a moat over upstarts and rivals, but it's not a moat over there. I'm guessing that's their number one competitor.
That's my guess too.
We have a whole miss from our chairman. Can successfully. Is this Jack Ma? No. Okay. Daniel Zhang, chairman and CEO, Alibaba. So not Jack Ma. We believe Alibaba can successfully integrate consumer internet and industrial internet under one umbrella. As our understanding of the digital world grows, it's important positioning. Alibaba Cloud is our second pillar of growth, and we continue to maintain market leadership. We grew 50% year over year. It's the third largest infrastructure of a service provider.
So it's got to be behind Azure and AWS.
That's my guess. We firmly believe that industrial internet is an important opportunity worldwide, is well placed to be one of the world's largest economies to capture and generate opportunities where all companies can become internet companies moving forward. Cool. We defined our mission is to make it easy to do business anywhere. We have remained committed to taking a long-term approach and investing for the future. This has been a cornerstone of our development. It's been our guiding principles. All right. Again, they're saying all the right stuff.
Mm-hmm.
AMAP has now been part of the Alibaba ecosystem for 8 years and around 100 million daily active users. AMAP has from being just a map navigation tool to a multi-screen, multi-application lifestyle service supporting platform during their travel. So that's their Gmail, Google Maps. We have a unique corporate culture. I don't know how we're going to verify that, but okay. Great. Company business overview. We make it our mission to make doing business anywhere online. We provide all the back stuff. We have all these businesses. We read all this, okay? We are the largest retail commerce in the world by GMV. Yep. Taobao Marketplace.
Mm-hmm.
We generate 66% of our revenue from retail. It's to develop digital commerce infrastructure. Okay. Retail initiatives. We innovated multiple business models and formats to serve various demands of consumers. Freshippo, our self-operating retail chain that integrates online and offline operations. We also digitize the operations of our offline retailers, such as Sun Art through Taoxiando, our online-offline integration surface solution for FMCG brands.
Fast-moving consumer goods.
Hey, look at you.
Thank you.
We established our community marketplace business to better serve customers by leveraging our next day pickup. Okay. Wholesale, retail, cross-border, that's Lazada. The largest e-commerce logistics network in the region with more than 82% of their parcels going through its own facilities, first mile. Okay. AliExpress, one of our international retail marketplaces, enables global consumers to buy directly from manufacturers and distributors in China around the world. Tmall.
For what it's worth, I remember during the height of the lockdowns when we tried to get an outdoor pool since you really couldn't do anything else during the summer of 2020. And AliExpress came up many times in our searches for being able to use that to get something in the United States.
Huh. Okay, then. It is an important e-commerce platform in China. We also operate Trendyol, the leading e-commerce platform in Turkey, and Daraz, a leading e-commerce platform across Southeast Asia with key markets in Pakistan and Bangladesh.
Those are two very large countries, Pakistan and Bangladesh.
Certainly are. Wholesale commerce, we operate Alibaba.com, leading integrated online wholesale marketplace in 2020 by revenue. Okay. Logistics, we operate our logistics network. Real-time insights for merchants to better manage their inventory. Okay. Consumer services. We use a leading local Ella.me. Yeah, we saw that. Cloud computing. We saw that. Digital media and entertainment. Our strategy of capture consumption beyond our core commerce business. Insights we gain from our core commerce business and our proprietary data technology enable us to deliver relevant digital media entertainment commerce to consumers. Okay. Yaku, the third largest online long-form video platform in China. Oh, it's third.
Mm-hmm.
Okay.
I wonder what the first two are. I mean, is it?
I don't. It can't be. It can't be. It can't be YouTube.
No.
To innovate and develop new services. AMAP, a leading provider of digital maps, so that's in their other division. Provides users with simple access to navigation and ride-hailing. DingTalk, the workplace.
Suffice it to say, they're going to get full credit for optionality from me.
Yes. Speakerphone market. Our ecosystem has developed around our platforms and businesses that consist of consumers, merchants, brands, retailers, and third-party service providers. At the nexus is our technology platform. Our marketplace rules position us in connecting these things together. Okay, so they say that they have an ecosystem of products that essentially work together.
Well, I believe that.
Okay. Yeah, so this is going to be a company that when they report earnings, you're going to be like, holy cow, I need to sit down and do a bunch of work.
And for what it's worth, I see Ant Financial down there.
There it is, Payments and Financial Services, Ant Group. Yes.
Yeah, and our friend Dave said that they own a third of it.
Oh, okay, good to know. They have a lot going on. It's kind of annoying. They go wide and then keep zooming in and zooming out.
Just so you know, this is 355 pages long. Pull up a chair, everybody. Get your coffee ready.
Consumers. Products and services. We know that. I mean, we get what they're doing, right? It's just keeping going for more details that we wouldn't have known otherwise. Over 500 million RMB on Taobao Live. Wow, like Taobao Live?
Sell something and you can talk to your people right there. I mean, they got a nice little picture of it right below.
Right, like Instagram Live?
Yeah, he's selling, it looks like some type of some fruit or vegetables or something.
Yep. So Taobao Live, our live streaming grew 90% and reached over $76 billion. So they're saying that they have a huge amount of data that is valuable. Yeah, I buy that. Shopping data. Okay. Follow brands, access different marketplaces, trends. Okay. Business overview, theme-based recommendations, curated product recommendations. Sure. Business, new product releases, platforms, and brands. That's what the app looks like. They're live streaming. Tmall flagship and interactive shopping experience. Oh, virtual try-on. So there's a augmented reality part to this. Taobao means search for treasure in Chinese. Huh. The growth rate of online goods, excluding, was 20%. Okay, top level traffic. Value. Merchants are primarily individual and small businesses. Tmall.
No, wait. If you go up under Tmall there just for 1 second, it says, I think Tmall was 23. Oh, it grew 23%. I'm just curious what the breakdown is in terms of revenue and gross merchandise volume between Tmall and Taobao.
I don't know. Yeah, I don't know if we're going to get that.
Yeah, it's
the
finding a needle in a haystack on this.
250,000. It's top 100 world's most brands. 150 million deals. Yeah. Okay. Okay. Enabling others. Okay. Alibaba. Effective consumer engagement platform, cloud-based smart operations dashboard.
This is about Lazada.
Yep. Lazada. Business overview, our new retail strategy, product and supply chains, fulfillment, consumer management. Okay, they're going for rapid delivery. Yep. Okay. Lazada. Good news, this is all overview. Yep, we get it. Continues to develop its service capability and logistics. So they have a fleet. 5 million average daily cross-border package volume.
So the one thing
the
one thing I will say about their fulfillment network is that, as far as I know, JD is almost entirely within the country.
Yes, that's my understanding too.
It seems like they're making a big point about the fact that this is in and outside of China.
Right. And they're continuing to make investments outside.
Right.
Their servers being protected, on the job training. Ding talk. Yeah, okay. Ant Group provides, Ant Group have an unconsolidated party, which we have a 30% equity interest since September of 2019.
Way to go, Dave.
Yeah, nailed it.
You got
wealth
it right
management.
on the head.
It does wealth management, microfinancing, and insurance. They're growing. So if they went public as planned, or if they did that, I don't think it might not be a liquidity event for them, depending on if they sell their stake or not.
Yeah.
I mean, it would make something that's illiquid liquid. Okay. So they're trying to.
So I know that product authenticity is another big thing.
Yeah, sure.
What I remember, because I used to be invested in JD, was that was like one of the big things that JD had. They could, because they weren't consumer to consumer, they were almost entirely business to consumer, and they could guarantee the validity, the authenticity of the products they were delivering.
Right.
Whereas if you're consumer to consumer, you could tell me you're sending me a brand name pair of sunglasses, but you could also just be ripping me off.
And how would they verify that? Again, it's the Amazon versus eBay model, right?
Right, exactly.
So we're going to become more energy efficient. We're reducing our carbon footprint. Recycling bins, great. Green campuses, public awareness, 70 million directly jobs, business overview, charitable giving. We're helping with COVID.
What do you think? I think we might need an approach here. Otherwise, we're going to go through all 300 of these pages.
Well,
Like, do
I
they
think
have?
I think we're getting to the end of the business overview.
Do they give us like I want numbers. Do they give us numbers here?
Well, that's what I'm still looking for. We're still on the business overview. So this is just, I mean, just know this. This is a complex business to analyze, like, period. Yeah, let's see if we can get just the financial statements. Oh, they have a lawsuit with JD.com. That's not surprising given their size. Yeah, their owning structure is
okay. Do we
complex.
want to go over this? Like, if you buy shares of Alibaba, technically you don't really own them. You own a holding company that's probably in the Cayman Islands. It's very confusing. To be honest with you, I don't totally understand it.
It's an extra risk you're taking on.
I think they're called variable interest entities, VIEs.
And you're buying an ADR, yeah. So it probably has a if it hit the fan, what is your ability to recover in case something goes horribly wrong?
Zero.
I don't
assume it's zero.
Not zero.
It's best to assume it's zero.
Yeah. This is just something you accept if you're going to buy a Chinese company that's listed in the US.
Yep.
Right? That's if you're not comfortable with that risk, this ain't for you.
You know it going in.
Okay. Our revenue grew 35%. Our net income increased 75%. Our non-GAAP income increased 42%. Our reporting assessment, core commerce, cloud computing, digital media, and etc. So here we go. We got numbers. Okay.
109 billion in revenue.
So total revenue was that converted into the US was 109 billion in the year ending March 31st. So yeah, the company's trading at what, 3 times sales ish. Stock-based compensation is 7 billion. So that's 7%. Adjusted EBITDA is 26%. So there ain't much room for operating leverage ahead.
True.
If they're already that profitable on that little sales, plus their gross margin was 36% ish. And then these are the breakouts: commerce, wholesale. So the most important ones are Chinese commerce, internet commerce, logistics, local consumer services,
cloud.
Cloud computing is number 2. But at $10 billion, yeah, 9% of sales.
But it probably has much better margins.
I don't know. Customer management, P2P. Okay. Cloud computing. Empowering customers. Okay. Okay. Billy. Okay. I've heard of that. We acquired newly issued shares for $1 billion. I mean, rounding error.
But so they own 8% of that. I know that's a platform that's really interesting because you can only play games on there if you pass a really kind of hard test.
Is that Billy? Yes, that's Billy. Yep. Sun Art Retail Group, hypermarket. We acquired additional effective equity interest for $3.6 billion. So they own 67% of that company, hence why they had to report it on their financials.
What does hypermarket mean? Does that mean it's like Walmart, but bigger?
So they own a maybe, I don't know. Monthly active users on mobile, 925 million. Great. So you're giving us this cost of revenue. Yeah, let's get to that. All right. So cost of revenue is 1.7 billion. No. Stock-based compensation. Yeah. Of 7 billion. Can you just give us a...
Here it is.
Here we go. Okay. That took a while. 94 billion in sales. No, excuse me. 109 billion in sales. So their gross margin is 38%-ish. Product development expenses, R&D, sales and marketing.
Sales and marketing, would you agree that is very low?
Huge number in absolute terms.
Right, but as a percentage of gross profit?
I would guess they're at the stage now where the customer acquisition costs are relatively low because everyone knows the name, right?
Yep.
They've reached scale. G&A, net income of 1.15 billion.
No, that's other income.
Oh, you're right. Income from operations of 13 billion.
Look at how much they get from interest and investment income.
11 billion.
I mean,
Shoo!
that's half of their income is from interest.
I'm guessing that's mostly investment income
Okay.
from selling. So how one-timey is that? So the year before it was that. So this is their actual.
Yeah.
This is more of their actual earnings power.
I mean, for what it's worth, though, I mean, it was pretty consistent between 2020 and 2021, their interest income, interest and investment income.
No, it doubled.
No. You're looking at 19, 20, and 21. From 20 to 21.
Oh, yeah, you're right. Thank you. Okay, thank you for that. You're right. I thought this was that. Okay.
And that could be from some of their investments too, like ownership and something like Ant Financial could be part of it.
Yeah, to me, this is the number that I care about.
No, I agree with you. This is something that we see with Alphabet, Google, a bunch, is they've got so much money that the interest that they earn on it and some of the investments that they've made are so huge. It's crazy.
So net income was 21 billion, but from operations is 13 billion. So yeah, this is going to be, so that's really important.
Mm-hmm.
So how dependable is this? I don't know, but that's 50%. So if you think that goes to zero or you're not counting that, then double their price to earnings ratio.
Right.
Double their price to earnings ratio. That's what it actually is. That's why the details matter.
Mm-hmm.
Net income of 21
And to be clear, I'm sure we're going to miss the exact specifics about most of this on a stocks from scratch. So that's something to dive into more if you're going to invest in this company.
Oh, for sure. Okay, so diluted earnings of $8.35. What's this to ordinary shareholders? Is this shares outstanding?
No, one is ADS and one isn't.
Oh, okay, because of the translation.
Mm-hmm.
Like one ADS equals 7, looks like ish, 7.5 ish of their other shares. Yeah, another confusing thing to keep in mind.
Mm-hmm.
Okay. Interest and investment income. See, this is an important thing to understand. Is that from sales? That doesn't seem to be repeatable.
It should break it out somewhere.
I don't know.
Because the thing is that if that is their investments in all these other things that we just talked about, like Bilibili, like Lazada, like for instance, Lazada could be in that investment in interest income. Do you know what I mean? Because they just have an investment in it. They don't own it.
Lazada?
Right.
I thought that was a wholly owned subsidiary.
It's not wholly owned. It's backed. So Lazada, Bilibili, so on and so forth. Or maybe I'm wrong. Maybe it is a wholly owned subsidiary, but I was under the impression that it was not. So it's possible that all of that optionality is accounted for in those investments.
Okay. Well, this is interesting here. So their net income was 21.9 billion. They're subtracting interest and investment income, right? Mm-hmm. This is from their adjusted EBITDA. That makes sense to me. Okay, adding in this income from operations, about half that, right?
Mm-hmm.
Roughly. Adding in stock-based compensation, which is $7.6 billion. Impairments, fine imposed pursuant to Chinese anti-monopoly law of $3 billion. Their adjusted EBITDA was that. So yeah, if you're adding in stock-based compensation, I mean that doubles their adjusted operating. So anyway, what's this company's profits? Well, I mean, this is reported. If you subtract out investment income, it's that minus that, so it's 10 billion. And if you add in the stock-based compensation back, it's 18 billion.
And we're generally fans of non-GAAP. So the non-GAAP, non-investment and interest income is somewhere between what's reported
and half of what's reported.
And the core, right. So it's like 3/4 of what's reported, basically.
Yes. Yeah. Yes. So that's going to be something so non-GAAP net income here $26 billion net income. Yeah, but this number is overstated because of the investments income.
Mm-hmm.
So the non-GAAP net income here, I would personally not use. I would use, yeah, like you said, about 3/4. So if you're looking at their PE and you agree with us that investment income shouldn't be counted as net income, at least what you would want to pay for consistently, the PE ratio here is understated. So the actual PE ratio is higher than that. Phew. Yeah, just understanding their financial statements is a bit of a head scratcher. Capital expenditures, so the free cash flow is $26 billion. Either way, their free cash flow is huge.
Just for what it's worth, when I went to go check, it said on Google, it says Lazada is majority owned by Alibaba.
Okay, so it is counted in their financials. Then. Okay. Product development expense. All right. Well, should we search for concentration?
No.
I don't think there's going to be any need to have customer
No.
concentration issues when you have.
I want to know what their balance sheet looks like.
Billions. Well, let's go to the most recent quarterly results for that. We might be able to pull that up easier. Oh, they have an investment day coming up. CFO succession. So they just got a new CEO and CFO. Okay. So this is the most recent quarter. Revenue grew 29%. If you exclude that, it was 16% growth. Cloud computing grew 30%. Active customers 1.24. Yeah, they're just jumping right into income from operations. So just keep all that in mind. You have to, there's asterisks around these net income and all that kind of stuff. For the full year, they're expecting 20% growth. Okay. So these are what the individual ones do. Okay. Good growth overall. Databases, digital media. Okay. Free cash flow declined due to increased investments in key strategic areas. Share repurchase. We repurchased 27 million shares. So the ratio is roughly 8-1. So they spent
$5 billion
for approximately under our share repurchase program. So they're buying back their own stock. Okay. Revenue was up. Income from operations was up. Net income.
Everything else was down.
Was up. Everything else was down. All right. That could be why. One reason why the stock's been under pressure.
Well, and again, I could be wrong about this because I am not an expert on what happens in China, but my sense is that part of this shakeup that's going on. I mean, Chinese stocks started falling before late November when all growth stocks started falling.
Yep.
And a lot of it had to do with the government being like, hey, you got to reinvest or we're going to do something about it. So they're reinvesting because they don't want it all to go into the hands of just a few individuals. At least that's my take on it. That's the story in my head about it.
That's just the whole geopolitical thing that you have to keep in mind. Okay, here we go. They had cash and cash equivalents were $69 billion. Because we bought back $5 billion in stock, partially offset by $3.5 billion in free cash flow and cash injections of $1.5 billion. Okay. Okay. Employees, a quarter million.
And how about debt?
That's what I'm trying to get to.
We'll get there eventually. Just go to page 132.
Exactly. Okay.
And we'll find it.
Here we go. Cash, short-term investments. So you add that together and you get to 68 billion. Okay. Total assets of 267. A whole bunch of that is equity securities and other investments. So long-term and goodwill is 45 billion. All right. Short-term liabilities is 60. The majority of that is accrued expenses. Okay.
Looks like total, no long-term debt.
Total liabilities is
unsecured senior
95.
notes.
So total non-secured, unsecured senior notes. So that would be debt. Non-current bank borrowings. So 20 billion.
20 billion. So
20
69
billion-ish.
billion in cash, 20 billion in debt. And if what we saw in stock card was right, roughly 30 billion in free cash flow.
5 billion for the quarter. So that's in the ballpark.
Yeah, I could see that.
With 1.5 billion of that being one-timey things. So from sales. Still, free cash flow is huge.
It's crazy.
Yeah, financially it's going to be strong. Okay, let's get to where would ownership be?
I think it would be in the annual report.
Yeah, let's search. Ownership. I'm gonna have to do beneficial.
Yep.
Beneficial.
There it is. Look at that right at the beginning.
Joseph Tsai owns 1% of shares. I don't know who that is. All directors own 2%.
Yeah, I think that
Jack
the big
Ma's
thing was
name in here?
Jack Ma is not in there.
And he's no longer. SoftBank still owns 25% of this. That was like the greatest investment ever.
Mm-hmm.
SoftBank buying a big chunk of this. Joseph. So
what's the first footnote say? Oh, Brandon says that is the owner of the Brooklyn Nets, who, because of about one toe's length, lost to these guys to get to the NBA championship.
Okay. So inside ownership, I wonder how you're going to score that. Let's go to management. Learn more about that. About us.
It'd be nice if they had it.
Leadership.
There we go.
Okay. Danielle Zhang has been our chairman since 2019 and our CEO since 2015. He's a founding member of Alibaba.
It said that there was a team.
He joined the company in 2007 he joined our company in August 2007 as CFO.
That doesn't make you
That's not the founder.
1999 is when it was founded.
He's still been there 15 years.
He has been there a long time.
Okay. He was the CFO of Shonda Interactive. I've heard of that company. All right. And what was his ownership? Danielle Zhang.
Less than 1. That's all we know.
0, according to this.
Is that what that means? I thought it meant less than 1. Well, no, because then that wouldn't.
Owns less than 1%. Yeah. So less than 1%. Well, less than 1% of 3 billion, 300 billion could be $1 billion. I mean,
it's hard to know.
I'm sure he has his financial fortunes on the line, but how much? I don't know. So this guy is Joe Tsai, joined our company in 1999. That would be on the founding team.
Yep.
And he is the executive vice chairman. And he was the CFO until 2013. Okay. CFO, Maggie Wu, in 2019. Recent, yeah. And wasn't there a press release just recently about CFO changing?
Yeah. I wonder if that's the new one or.
No, she said she joined in 2019.
Oh, yeah.
Toby Zhu named Maggie Wu to continue board of director.
She was not on there for very
April
long.
1st, 2022. And who is the new person? Toby joined in 2018. Okay.
It's never great to see that.
Michael Evans, president since 2015.
Goldman Sachs.
Served as vice chairman at Goldman Sachs. Okay. So inside ownership is not going to be high here.
Nope.
Do they have nothing about Jack Ma? Nothing.
Yeah, I think that there was a really big falling out.
Okay. I mean, should we search Glassdoor?
I mean, what the heck? Why not? We can try.
I don't know how to review what it's like to work for this company.
Oh,
that's not it. Alibaba.
Yep. No,
Yeah,
we're not
that's
going to get
if
anything.
that's not it. Is this a good place to work? Don't know. All
I'm
right.
not going to penalize them or give them credit. So it's like
Yeah.
a wash.
All right, I'm ready. You ready?
I'm ready.
Or at least as ready as I will
Yeah.
be.
Yeah. This
120.
this is a perfect example of one where it's the process of going through and researching the
We learned a lot.
educational value that we're going for.
Okay. So let's start with financial resilience. Their balance sheet was very strong, right?
Great
They
shape.
did have, they have 30 billion in debt, 68 billion in cash.
20
so
billion in debt.
very strong. Gross margin here was low, 36%, right?
Yep.
Doesn't have the ability to increase over time.
Mm-hmm.
With more scale, I mean, they already have so much scale.
Well, cloud.
That's 8% of sales.
Yeah, but I mean, what is it at Amazon? And how much does that move the needle in terms
That's
of
true.
their gross
All right,
margin?
I'll give you 1 point on gross margin. Returns on capital, assuming that Stock Card's data was right, their returns on capital were good.
Yeah.
2. I'll give them a 2. They weren't like in the 20s, but that might just be a nature of where they are. Plus, that return on capital number is going to be biased upwards by their net income, which is biased upwards by their investment income. Free cash flow, I'll give you full credit. Earnings, I'll give you full credit. Okay. Moat, I already know I'm giving you a 20.
It doesn't matter where it's coming from. You know it's going to be 20.
Okay, so I'll say the distribution. I'll say the brand for sure. I'll say switching costs for customers, and I'll even give you credit for the network effect. And I'll even say it's widening because you're adding on so many. I'll give you a full. That's 20. That's 25.
I got something for you. Because one of our people went and Alexander did this Alibaba group. If you put it into Glassdoor, it comes up, and they've got almost 1.2 thousand reviews, 3.9 stars.
I just typed the name in wrong.
No, you got to put group, Alibaba group.
Okay. Alibaba.
And decent reviews, not great, but not bad either.
Thank you.
I actually think those are pretty good reviews for a company of that size.
Dan, that is the CEO, right?
Yep.
So 3.9. Yeah. Pleasant working environment. Quite hard to get work-life balance. Very expensive. Hard to work there. Okay. Thank you. Thank you for that. That's something. All right. Optionality, full credit. You're doing everything under the sun. Organic revenue growth. It's still over 15%. Yeah. So that's going to be are they the top dog and first mover? Yep. Do they have any operating leverage ahead? So does this company have the ability to grow its profits faster than its sales through operating leverage gains? I'm going to say that that's limited because their gross margin is only 36% and their GAAP net income is already in the, a few percent, right? I don't know off the top of my head how many. It's like 20 billion. So, yeah, they're I'm going to give you very, very little. No, I'm going to give you no credit on operating leverage because you're already at the point where you're,
like I said, cloud is the.
I'll give you one. I'll give you 1 point for that then. Okay. Customer acquisition costs. Pretty good. The name is very well known, right? So they're spending a third of their gross profit on sales and marketing. So that's pretty good. So I'll give you 3 to 4. I'll go 4. Customer dependence. Once you're buying from the cloud and the company, how dependent are you? I'm pretty sure their revenue growth has been up and to the right since forever, including through this. So I'm going to say you are very dependent. I'll give you a 4 on that. Is revenue recurring? Yep. Once you're a customer, do you buy from this company again and again and again? Yes. Pricing power. I'm going to say that's average.
Yeah, I was going to say that's probably middle of the road.
Yeah. Okay. Founder. Well, you have some people on the board that have been there since day one.
Yep.
So I'll give you full credit for that, even though I would like Jack Ma to be on there. Inside ownership, I'm giving you a 0. I'll give you a 1. It's probably in the
nominally
billions.
it's a lot.
Yeah. Glassdoor ratings, I'll give you a 3. Mission statement. You hammer that home well. How has the stock done since coming public? It's lost to the market. So that's a 0. They are buying back stock. So I'll give you 2 points for that. And are they doing versus expectations? Let's check. Miss, beat. 0. All right, 77.
Not
All right,
bad.
now the bad stuff.
Now this is what everybody came for, Brian.
Customer concentration, no. Industry disruption, no. Outside forces.
The government.
I'm gonna take care of that in geopolitical.
Okay.
No. Big market loser, nope. Binary event, nope. Extreme dilution. What is the dilution rate? Well, it should be going down at this point. $7 billion in stock-based compensation.
There was huge stock-based compensation.
And $5 billion in stock buyback. So that's roughly equal. I'm going to assume the dilution here is neutral.
Okay.
Growth by acquisition, a little bit, but that's not, it's mostly organic.
It's just that there's so many of them.
Complicated financials. Yes. Yeah. -3. Antitrust concerns. Well, you were just fined by the government. Yes, -3. Headquarter risk, -3. And currency risk, -2. So that's a 66 on mine. So I will say overall, checks a lot of boxes in the business, checks a lot of the boxes that I look for. It's just, I mean, how harsh do you want to be with these?
Well, but it's good because what we're doing here is we're showing you where we think the risks are. So for you, that's something that's going to make you be like, I'm not going to touch it, but someone else might have a different level of comfort with it.
Right.
So we're not saying you should or shouldn't. We're just showing you where we think those risks exist.
Right. This is yet another company I am not excited to put in my thumbs down portfolio, because if you just ask me, what do I think it's going to do? I would say, I think it's going to beat the market. However, this is a stock that I'm personally not going to buy.
Right.
And as always, we'll learn.
Yep.
If I'm wrong. All right, your turn.
All right. Full credit for the mission statement: to make it easy to do business anywhere. For their moat, I give them 2 points for the network effect. I think they've got that with both Taobao and Tmall. I give them 1 point for low-cost production. I know they're up against JD, but that international aspect of it, I'm going to give them some credit for. And I give them 1 point for their brand value, so that's 4 total. And I'll give them 3 points for optionality. Now, here's the thing. When you do this, what I really feel like is you get all your points in that top section and you lose all your points in the bottom section with me. So having 9 points in that top section is really good. It's really good. Full point for their cash debt free cash flow. Off nothing for concentration. Glassdoor, can we give them a half point? Can you do that for me? Yeah, there we go. I'll give them a point for the founder. Ownership, I'm going to take a point away. And then there's something that's not on this sheet because we've never done this before, but I do it when I've done these reviews on the Motley Fool's premium boards. I always take 2 points off if it trades in China. I've been burned enough times to know that that is just something that I would have better investment results if I always took 2 points off for it. So take 2 points off. It's an 8.5, which means it's still going to be in my investable
thumbs up portfolio. It's
going to be in the thumbs up portfolio, but I always take 2 points off for that. Okay. I've been burned enough times, and I still remember being on air on the Motley Fool when we found out about Luckin Coffee, and it was just like, whoa, what? It's all made up?
I would say we're similar. Both of us say that our checklists like this business a lot.
Yes.
But the extra risks just make it a little bit dicey. But that makes sense given this stage of this business. So yet another one that we're split on. And again, I'm putting this in your thumbs up anti-fragile portfolio. And again, if you were asking me, what do I think the stock's going to do? I would guess it's a market beater from here. That would be my guess.
Yep.
But score is 8.5.
Yep.
But this is a stock that I'm personally not going to buy.
And so this is going to go in your thumbs down portfolio for our tracking purposes.
Don't want it to.
Oh no, but not that one. No.
Not that one. This is a stock that I wouldn't. Yeah. If we had a third category that's just too hard.
Yeah.
that's where I would put this one. So if somebody said to me, I mean, I always come away with, if somebody said to me, I own Alibaba, I would be like, I get it.
Yeah.
I get it. You're comfortable with the risks. I think I like the business. But for me, it's just in my too hard. Why bother category, just slightly, but not because I don't think the business is good, just because of the other stuff.
Now, there's a great time to pitch the fact that we do have a stock picking contest on stockcard.io. If you go to the Portfolio Center, you register, you sign up for the Beat the Bryans contest. Let me tell you something. Right now is a very good time to start if you haven't, because Brian and I, we pick growth stocks. We're definitely near the bottom on this so far. We did 1 year because we thought that was the limit that we could keep people's attention. We'd like to do it 3 to 5 years, but head on over and do that. One question I just want to hit on real quick. Brandon asked, do we run models on scores and correlations of how they do? I have done that in the past, and obviously that changes over time. But to give you an idea, there were 8 stocks that I had identified as anti-fragile by December 31st, 2019. Between then and December 31st, 2020, which was that was the year that anti-fragile portfolios were designed for, to thrive in chaos. Those 8 stocks averaged a triple. And then the ones that were a score of a 6 or below did very poorly. And the stuff in the middle was all over the place.
Mm-hmm. I've done them on mine too, but my system doesn't really work well for that kind of analysis. One reason is, as part of my framework, you get more points if you've beaten the market and less points if you've lost to the market. So everything that scores in that upper 80 plus tier for me is a stock that has high likelihood of already beaten the market. Yeah. So it's not so much something that I can look backwards on, but I don't know how to adjust. I don't know how to adjust for that other than taking that out, but that's an integral part of my score because I like to invest in companies that have already beaten the market.
Right.
So that is a limitation of my framework.
The goal here is more to show people what the moving pieces are.
Right.
Like that's if we're doing that, I think we're adding some value.
Yes. And Joe Tsai owns the Brooklyn Nets, which is great. Most brokers will exchange your shares to Hong Kong if BABA gets delisted. Fidelity and Schwab for sure. Yeah, I'm pretty sure that something like that would happen if that was going to happen. If that was going to happen, I'm guessing you would still get your money out if you wanted to sell. At what valuation? At what price? I'm sure the stock would take a big hit. Yes, so great points here.
I'm just curious, Brian. Do you own any companies that do the vast majority of their business in China?
Not that I can think off the top of my head.
I don't anymore. And some of them do some business in China, but Baidu and JD used to be ones that I held, but I just don't anymore.
Dave Drum says Jack Ma owns 5%, but he's not involved with the company anymore.
Right.
Maybe there's a TLDR at the end. Yes, we'll do a summary video.
I think he meant the report, but they should take that comment too.
Yeah. AliExpress is Wish, but good. Yep. So this just, no surprise, right? So this comes down to are you comfortable with the risks of owning the company or not? On the one side, if I was going to play China, I would probably definitely steer towards the mega billion cap companies. On the flip side, for to do well, this company has to become $1 trillion company. And Anti-Tourism says Charlie Munger has given this company the thumbs up.
And apparently,
and you are correct.
A whole bunch at the end. Our last comment says a whole bunch of value investors have. The risk reward profile might seem really good for people like Charlie Munger right now. So. I can see why they would do it.
Did this stock really fall 37% in one day?
I don't know.
That seems high. Anyway, I certainly learned a lot. Boy, is this a complicated, fascinating business. I think it's wide moat, tons of optionality, and there are lots of things to like here. It's just in my too hard. Too risky side of my portfolio. And if I was going to take a position in a company like this, I would be like, all right, I want to be compensated with 10x returns, like 10x return potential. Do you think this is a $3 trillion company? Do you think it could be worth as much as Apple or a Microsoft?
I think it could be.
It's possible if they hit their goals. So there you have it. Well, we hope you enjoyed this. We hope it was educational. We will be doing a summary 5-minute video in the next week or so. Until next time, Brian's out.